quant research, based on talking to bankers, based on inside information, based on corporate mergers and acquisitions information, based on money flow, that the British pound is going to be significantly higher inside of 6 to 8 months. Okay, they may not know exactly how much higher, but they'll know it's significant. They may have a target, let's say, that's 1,500 points away, possibly a little bit less, maybe 1,200 points away. Now, you have to remember that these guys are dealing in terms of 500 million at a whack. I mean, these are not small positions. Now, that means that they are trading in 500 million at a whack, which probably means their total position size is going to be anywhere from $5 billion to $15 billion. And again, we've got some background noise. Somebody must be on a cell phone. If you can, mute out your microphone there. It would help everybody out a little bit. So, oh, that's great. Thank you. Okay, so they're looking at this spot back here, and they're thinking to themselves that the British pound is going to be much, much higher. Now, think about this. If you're thinking in terms of 6 months away, 5 months away, 4 months away, looking at an hour chart is not going to have any sort of a draw for you. You're not even going to want to look at an hourly chart. You're going to want to look at a weekly chart. Okay, that's why I look at the weekly chart to begin with. Now, let me erase this. There we go. The big opportunities that you are going to see coming up in the marketplace, and believe me, if you get nothing else out of this web conference or the course itself, this is going to be it for the Forex market. The easiest way to tell where the opportunity is looking at where is the weekly high and where is the weekly low. Once you've seen those 2 points, you know where the opportunity is. And that spells literally money. Because you're going to know where the big money players are going. Are they thinking down or are they thinking up? So what does that mean specifically? Well, what that means very specifically here for the British pound, let me go back to the normal mode. Hope you don't mind I'm talking to myself to make sure I don't forget what I'm doing here. This drawing tool is a little bit different for me than on my videos. I'm used to a different keypad setup. Well, what you can see by looking at weekly highs and weekly lows is whether or not the big money players are bullish or whether they're bearish. Now, I'll give you the punchline here. The punchline is this $2 level right here is where the opportunity lies. Now, I want you to think about this, and I'm right at the edge of this 20 minutes here, so I'm going to have to go quick with this explanation. The last time the British pound was up at $2 was 1992, and it didn't spend a whole lot of time above it. So it's going to take a huge shift in thinking to make the British pound push above $2 and stay there. And if you go back even further, you've got to go back to 1978 to see the British pound above $2 for any length of time. Okay, so we have some major decision making here. Now, if you learn nothing else from this, you're going to learn that all of this stuff, all the chart, all this candlesticks and all this squiggly lines, all it's doing is showing you the decisions that market participants are making. Now follow me here. This is very, very important information. If you want to tell where the big money is going, you look at the week high and the week low. What do we tell here? Well, you can see here that the low is right there for this week. Well, is it above or below the prior week? I mean, literally, it's this simple. Well, the easiest answer is it's above, right? Well, if price is moving up, does that mean that they're bullish or they're bearish? Well, it means that they're bearish. Okay? Well, that was pretty easy. What about the high? The high is right here. Did the market move above the high of the prior week? Absolutely.